Good afternoon. Thanks for joining us today for this webinar about tax-efficient college planning. My name is Kendall Beamer. I am a wealth advisor at Link Wealth Strategies, and we help folks out with a lot of different things regarding finances, and college planning is one of those things. So we are also joined today by Bradley Hamill, a CPA who actually partners with us. We help many of his clients with their financial planning needs as well. So I'll go ahead and have Brad introduce himself briefly, and then we'll get started today.
Kendall pretty much covered it, but yeah, I'm Brad Hamill, a CPA here in town. I've been at this location for 15 years. I've been doing taxes for about 35, and I really enjoy helping people. It's fun to watch the families age and the college kids grow up and the changes involved, and then they leave home and all the fun stories I hear with all of that. So I enjoy helping folks out. So Kendall, take it away.
Thanks, Brad. Yep, Brad will be popping in and out of here with some different tax strategies as well as we work throughout the presentation today. So I'm going to go ahead and share my screen here. And we will get going. So thanks for joining us as we're talking about college planning today. As we are going through this presentation, feel free to drop questions in the Q&A box below on that little bar down there at the bottom. And we'll get to any of those questions here at the end of the presentation today. So if you have a general question, that's the best way to get it to us. If you have a specific question about college planning or you or your student situations more specifically, feel free to just shoot me an email and we can set up some time to talk about your situation more specifically. So as we get started today, I just want to kind of frame this conversation as to why this is important, why we're even talking about college planning. So the cost of college is increasing exponentially. This cost of college increases about 8% every year on an annual basis. So that is, drastically outpaces inflation for most other goods and services. So increases quite quickly, and so something we certainly have to be aware of. So this is also one of the first times for a lot of students, a lot of your kids, it's the first time they're making a really large life decision that affects their financial future, affects them financially now, but certainly in the future as well. So it's a great time for us as parents, as guardians, as people who are advocates for these students to be helping them walk through these decisions and helping them make these decisions and helping them learn about different aspects of this so that they can make really good decisions moving forward. So here are some of the things when we're talking about the cost of college. We're not just talking about tuition, although that is a large piece of this puzzle here. So we're also talking about room and board as well. That averages over $11,600 for public universities, over $13,000 for private universities. We're also talking about books and supplies, the access codes. If you're not familiar, some of these little things that you buy, they're about this big. To be able to access a textbook online can cost upwards of like $150, and it really hurts to purchase those. Those are some of the things we're talking about, as well as those books and supplies. Transportation is another thing to consider as well, especially depending on where your student goes to school. But parking passes, public transportation, depending on the city that they're in, all those different kinds of things are factors as well as we're thinking about, the entire cost of college. And then personal expenses as well, certainly. So if your student decides to join a fraternity or a sorority, those fees can certainly add up, as well as any discretionary spending and just general living expenses too, as they are going to want to go out, and do things and have different expenses, even just for normal things that we would do for ourselves. So a little example of the cost of college and how much it has gone up over the past many years. This graph goes back about 50 years to 1970 and just shows how the cost of tuition and fees specifically has increased over that period of time. So specifically taking a look at the red line there, if you were in college in a public four-year institution about 20 years ago, the early 2000s, you probably paid about $3,500 for your tuition and fees. If your kid went to that same school now, or in 2020, 2021, that would have cost them $9,300 for the same amount of education. So that's what we're looking at here. When we talk about the drastic increases, just kind of puts a little bit of framework around that. So that will only continue into the future. So it's really important that we continue to prepare for that and prepare our students for that well. So today we are going to be taking a look. There's so many different variables that are encompassed in this conversation, but we're going to boil it down to a couple of different sides of this issue. So we're going to look first at some strategies for lowering the cost of college. How do we get that bill down a little bit and make that initial number a little bit more affordable for us and our students? And then also, how do we find funds from outside sources? That's going to be the second part of our conversation here today. So our first strategy for lowering the cost of college is to utilize community colleges and or advanced AP classes, advanced placement classes at your student's high school. So community colleges often have partnerships with local high schools to offer some of these classes at a lower rate. And that is a great opportunity as well. Certainly also just going directly through a community college could be a good option for your student as well while they're still in high school. Generally have the opportunity for some dual credit courses there. Or even after they graduate high school, spending a year or 2 years at a community college, kind of figuring out what they want to do is a great option as well. So these are some numbers that you're seeing on your screen from tuition prices last year from Allen Community College, which is a local community college around this area, and then University of Kansas. So as you look there, you can see that the price that you pay for an entire 3-hour class at Allen Community College is just a little more than a single credit hour at the University of Kansas. So as you can probably imagine, taking even just a few of these courses can significantly cut down on that top line cost of college over the span of as many courses as a student needs to graduate. So that's a great opportunity as well. So moving on, strategy number 2 for lowering the cost of college is technical schools. If your student is specifically interested in a specific career or trade, this can be a great option. So these generally have lower tuition costs than four-year universities. Programs often last 1 to 2 years as well. And also oftentimes have partnerships with different high schools and universities that make attendance even less expensive. So for example, Washburn Tech in Topeka has a relationship with area high schools that allows these high school students to take classes for free, just paying minimal fees and materials costs for certain degree programs. It allows them to do that in a dual credit way with the high school. So often these programs and these fields have very high placement rates as well. Washburn Tech has a 94% placement rate of students coming out of these programs with certifications to be able to go directly into fields, making competitive salaries right away. So that's a really great opportunity as well, especially if your student is more gifted that way towards a specific trade or skill. Another thing that we really want to consider, if your student's thinking about going to a 4-year institution somewhere, college choice matters so much. It's going to end up being one of the largest factors that affects this price tag overall for a 4-year education. So in-state versus out-of-state tuition will drastically change this price for your student. There are also some doubling and tripling the cost even as far as going to an out-of-state school versus an in-state school. So there are certain areas of the country, the Midwest Student Exchange Program is one of those, but there are several of these throughout the country. There are reciprocity agreements between state schools. This one specifically in the Midwest is the agreement between 8 Midwest states that caps the tuition for any students in these different states. So if you're a student in Kansas looking to go to a state school in Iowa or something like that, they do actually have caps on how much they could charge a student from Kansas. So that's helpful too. Even staying within the region oftentimes then can be a little less expensive than, if your student were to go really far away for school. So, and then also starting at a community college, like we mentioned earlier, for some of those prerequisite courses or a few, classes that they would need to take anyway at a four-year institution, that can be a really great way to lower some of those costs as well. So we've talked about the price tag of college so far, but now we're going to move on to kind of the other side, some of those funding sources. So if you know what your price tag is and have some different ways to be able to lower that, how can we get some funding from other sources other than ourselves to be able to help pay for this? So many ways to go about this. We're going to discuss a few of them today that you might have heard of or that you might have thought a little bit about before. So the first one we're going to talk about is 529s or educational savings accounts. So this might be something that you have started for your kid a while ago, or if you have a child that's going to school in a few years, this might be something that you have thought about or opened or started contributing to. So this is a great way to begin saving for college in a tax efficient manner. 529s can be used for qualified educational expenses, tuition and fees, room and board, books and supplies, things like that. I'm going to hand it over to Brad for him to talk a little bit more about some income tax considerations with 529s.
Thank you, Kendall. The 529 plans are a great tax efficient manner to save for college education. The first benefit is the tax deduction on the Kansas income tax return or the state income tax return that you're filing. There is no deduction on the federal side, but there is a deduction on the state side, up to $3,000 per child, and so that's a benefit there right up front going in. But the big benefit is later on. Say 10 years down the road, you put $3,000 a year in for your child, and that fund that's $30,000 you've put in, 3,000 times 10. Let's say it grows to 60,000. And you pull all that money out to pay for those 4 years of schooling, all of that money comes out tax-free, both the original you put in plus all of the earnings, the extra earnings on that account. So that's a great tax savings there. You get a big chunk of tax-free income, and everybody likes that. And that, I think, is all for now on the tax side of the 529. I'll come back later with some more comments.
Thanks, Brad. I appreciate it. Awesome. Okay. So we'll go ahead and hop on to our next strategy for funding sources here, and that would be scholarships. So this is a huge way to be able to apply for some different merit-based and not merit-based sources of money to be able to pay directly towards tuition and different costs of college there. So great resources and places to find scholarships. This can kind of be a little bit of an overwhelming search just on the face value. So there are so many scholarships available, and it takes some work to boil down for your student to boil down what they might be actually able to apply for, what they might qualify for as well. So a lot of times the counselors and teachers at your high school are great people to ask about this, to point you in the direction of some more local or specific resources for your school or for your area. Also, the financial aid office at a college or university that you are thinking about attending, they are great folks to sit down with you and just show you what is available through that college or that university. And then also they can are oftentimes some good resources for community-based scholarships as well, and kind of know where those can be found and maybe potentially what you would be eligible for. So any community organizations you were involved in during high school also are great people to ask about this. Ask if there's maybe a scholarship available for something you were involved in, or potentially they might know some other people as well. So for instance, like Stormont Vale Hospital is a place that I know a bunch of folks that volunteered in high school, and they actually had a scholarship for a former volunteer at the hospital as well. So you could, if you volunteered there, you could apply for that. That's a great kind of a great one as well for an organization that you could have been involved in, and it's kind of a good example of that. So there are also lots of scholarship websites. Scholarships.com, fastweb.com are some examples of that. There are many more out there, but those allow you to fill out some information about yourself initially, and then they are able to help you understand, kind of narrow down and filter down what you're eligible to apply for. And then also those websites, have the dates that you have to apply for these scholarships and all kinds of things like that to help you keep on track. So those are great resources as well, just to find a place to start and kind of start a list of these scholarships that your student will want to apply for. So also, scholarships is certainly a volume game. I just want to put that out there as well. So planning to apply for dozens of scholarships and get a few is the direction that I would lean. Your student is certainly not going to get every scholarship that they apply for, but even if they get a $500 scholarship, that would be equivalent to working over 30 hours at their $15 an hour job. So every little bit counts and is a great benefit for them, and really helpful to pay for this cost of tuition. So the third funding source I wanted to talk about and make sure we covered is students' work. So certainly a part-time job, I think, is healthy in a lot of ways for students as they are going through college, but strategically choosing where they work can be a really helpful piece of this as well. A lot of companies nowadays, a lot of times larger companies, have some sort of tuition reimbursement for qualified employees. So finding a couple examples of some of these companies on the screen here, but choosing a part-time job where that assistance will be available is a really awesome thing as well. Oftentimes that you will pay for the tuition up front, and then the company would reimburse you after you show them your grades at the end of the semester. So that's an awesome way to get a little bit of assistance on tuition as well. So fourth item here is grants and work study. So this is something that comes after you apply for the FAFSA, the free application for federal student aid. Several factors that determine whether a student qualifies for grants or work study. But grants are needs-based funds available to students that meet certain criteria. And work study provides on-campus jobs to students up to a certain amount of hours per semester that will help them cover some of those costs. So like I said, qualification for these is determined by the FAFSA. You begin to fill that out in December, the year prior to your attendance. And it's important, especially for grants and work study, to fill this out early. For the most part, grants and work study there's a certain pool of funds available for these two things. And once that pool of money is gone for that year, it's gone. So if you apply earlier, you have a better chance of getting awarded some of those funds if you're eligible for those. So, and then the fifth funding source here, I know it's certainly been a topic of conversation in the news recently, student loans. So students, this is also determined by the FAFSA, how much you are able to take out in student loans. You can take student loans. Your student will likely have student loans available to them above and beyond the cost of their actual tuition. You can take additional funds. You can take all of the loans available to you if you'd like, and use that money for living expenses, for savings account, emergency fund, different things like that. A lot of folks do that and use that method. It is a very expensive way to pay your living expenses and to boost a savings account or anything like that. So don't necessarily recommend doing that in most cases. But once again, filling out that FAFSA early to know the value of the loans available to your student will be really helpful. Another thing to keep in mind as you're seeing that offer letter with your student is subsidized versus unsubsidized student loans and the difference between those two. So if your student has subsidized loans available, that means that the U.S. Department of Education pays the interest on those loans while the student is in school and then until 6 months after they have left. Unsubsidized means interest accumulates while the student is still in school. So, for instance, if you take out $5,000 in student loans for your first semester of college, once you graduate, hopefully in 4 years or so, that number would still be $5,000 if it's a subsidized student loan. If it's an unsubsidized student loan, then interest has actually been added to the top of that $5,000 for the 4 years you have been in school, and is then a much larger number once you graduate and have to start paying that back. So that's one thing to keep in mind as well, is that subsidized is generally a lot better deal for a student than unsubsidized. So I know we talked a lot about the FAFSA here, so just wanted to tell you a little bit more about what that is. Free application for federal student aid. This determines what type of aid your students qualified for, be that what types of loans, grants, work study is available to them. It is dependent on financial need, and it is really important to have the parent fill this out with the student, as it does actually need a lot of financial information that your student likely does not have access to. You have to use some of your tax returns and different things like that. So they use what they call the expected family contribution, a number that's a calculation that they run based on a lot of different things. A lot of the different assets that you have, which are listed on the left, are the ones that they do take into consideration there. So that's something to be aware of, that this is, you are going to have to go back in your records and help your student out with that for sure. Like I said, best to get on that early. December is when that opens up this year, so that you know how much your student is eligible for if they're going to school next August. That's what you would want to do. So I know we have thrown a lot of information at you today. I'll have Brad hop back on here in a moment if he has any other thoughts about tax implications here of these items. But as far as next steps with the information that we have provided today, I think that certainly the most important thing here is to make a plan. Whether you are planning on funding 100% of your child's college education, or none of it, or anything in between. Really important to wrap your head around that, kind of know what all that entails, what those costs entail, and make a plan for how you want to address that. And then also communicate that with your student as early as possible. That is very helpful to get them on the same page as early as you can, so that they have some time to kind of figure out what their responsibility will be in this, and what they need to do in order to set themselves up for success as well. So be a team with your student and help them walk through this, and they'll end up in a pretty good spot. So there's also no correct way to pay for college. I think that's very important too, that paying for all of your students' tuition, paying for none of it, choosing what pieces you might be able to help out with, anything in between, whatever you end up deciding. There's not a correct way to do this or not. It really depends on your situation and your student situation, and putting those things together to be able to make the best situation possible for them. So Brad, any final comments on the tax side of things here?
Yes, I do. I get a question very common from all my tax clients with college-age children. The question is, can I still claim my child as a dependent on my taxes? Well, like everything in tax, that's complicated. But the general rule that people know about, and the reasons for asking that question, is once a person turns 19, the rules about claiming them completely change, and so that it's all in the gray area at that point. And just if a person is 19 or over, like your child, and they're still living at home and they're not going to college, but they're working part-time, if they make more than $4,400, you can no longer claim them on your taxes. So that's a big consideration for these 19-plus-year-old children that are still living at home. Doesn't matter how much you spend on them, how much their total upkeep is. If they earn more than $4,400, you cannot claim them. Now, if they go to college from the ages 19 to 23, that income limitation does not apply. They can work 5 part-time jobs, make a lot of money. It doesn't matter. You can still claim them as a dependent on your taxes, and you would qualify for the other dependent credit at that point, which is $500. For kids under 17, we get $2,000 tax credit for the child when you claim them. 17 and 18, you get $500, and then from then on, you get $500 if you still qualify to claim the child. The other big tax consideration for a college student is a college tuition credit, the American Opportunity Tax Credit. This is another great funding source for college. This can pay you cash on your tax return up to $2,500 a year for the first 4 years of college. So that's an extra $10,000 in free money from the government. And so that's a great credit to take advantage of. And the reason I ask about claiming the child is whoever claims the child gets the credit. And so the parents still have to be claiming the child to get the credit. Occasionally we have a child, go off to college and they grab their W-2s and they go online and they file the return and they claim themselves. Well, that really kills that whole credit, because then the parents can't claim that credit any longer. And the student doesn't get the full credit if they even knew about it or even tried to get it. So definitely watch your kids. If they're going to college, continue to communicate with them. It doesn't matter if they're away in the dorm all year, you can still claim them, so they don't have to physically live in your house. But when you claim them, then if you spend up $10,000 or more on tuition, you will get the full $2,500 tax credit. There's income phase outs and various things, so I got to be careful with that. But that up to the $2,500 full credit on that. So that's like I said, that's $10,000 if you can claim the child. So it's very important to coordinate your taxes when you have any child 19 to 23 that is going to college, to figure out who claims who and how that all works together. Now, once they turn 24, all the rules are gone on college. Then you basically can't claim them unless they make less than $4,400 a year, and they're on their own, and the credits are gone and all that. There is another little credit. It's not bad. It's up to $2,000, or the first $10,000 you spend. It's educational lifetime learning credit. And that's available to every American at any age. So even if you're an adult and go back to college when you're 40, if you spend money on tuition, there's a potential credit out there for you. That first credit I mentioned, the American Opportunity Tax Credit, I briefly said the first 4 years of college. Well, that's a big deal. That credit is only good 4 times in your lifetime. And so once you've used up those 4 chances, you're done. But then the American Opportunity Credit, or the Lifetime Learning Credit, takes on after that. So there's some really good credits by the IRS to help you pay for college. It's obviously the United States would like, if college is your future, they're willing to help you out with all these loans and subsidized and tax credits as well. So certainly keep the tax side in mind if you have a child in college up to age 23. I think that's the only other thing I can add right now, Kendall. So do you have any other questions for me or anybody else?
All right, I think that's great. Yeah, I appreciate your time today, and appreciate that. That's really helpful to know that those are available to students and their parents as well. So yeah, that's a big piece that yeah, you wouldn't necessarily know about just at face value. So thank you.
You're welcome.
All right, as we wrap up today, if you have additional questions or want to talk further, if there's something that we didn't get to, or a question that you have about your specific situation, feel free to reach out to us. We do have something available that we call our college planning pathway, where we meet with parents and students throughout the students' junior and senior years of high school. So discussing these principles that we've talked about specific to the student situation, and helping you guys make a plan for junior and senior year, as far as, ACT and SAT testing, scholarship search, college visits and applications, the FAFSA as well. All of those different pieces, kind of put those into place for you and help you think through all of the items that you'll need for those different things. And then talking about the finances as well. and things that we can do to help you on that front. So feel free to reach out to us if you're interested in talking more about that. We're always happy to help. So with that, thanks for joining us today. We appreciate your time, and we will see you on the first Wednesday of next month for our next webinar in the series. Thanks.